Hello, everyone. I hope you're all doing well today and enjoying this absolutely unprecedented moment in the stock market's history. This entire couple week phenomenon that we've been watching right now will be one of these moments where we look back in time and say either a tremendous amount changed because of this moment, or that was a hell of an experience. I made enough money to retire at the age of 20. Um, so we have seen, like I said, this incredible phenomenon where it seems that retail traders are rising against big money. It's the little guy finally screwing over the big guy. We see that narrative time and time again through all the chat rooms, through Reddit, Twitter, whatnot. Dave Portnoy talking about it's a different story when the rabbit has the gun. So there's this little moral uprising that we are seeing right now throughout the retail sector, which is pretty cool to be a part of. But overall, it almost feels irrational. It's like this has felt never really been felt before. Um, and so when we're kind of treading in these types of environments, obviously caution is the best approach. You can throttle things, you can go full steam ahead, but overall, you definitely want to take that cautious approach because this is a long-term game. This is a marathon, not a sprint. We're not looking to make $1 million in 3 days of trading. We're looking to make $1 million over months, years, even. Um, and that's just the better approach. That's the long-term approach. You make $1 million in 3 days, it doesn't really mean much, and then you are likely to blow up your account doing the same thing with a stock that was not ready or was not situated in the same position as the one that got you $1 million. But like I said, I'm playing long term, and so because of that perspective, I made a tweet explaining my perspective on everything right now, and decided to take off all of my positions. So I'm 100% cash. Today and this week has just felt weird. And I mean, there's reasons why I have that revelation, have that feeling. The main one that set me off today was it was, as explained in this tweet here, how my class in political science today had a 15-minute discussion about GME, NOK, BB, and this short squeeze phenomenon that we are seeing. Like when professors and students in a political science class are talking about are talking about the stock market, it's a weird feeling because typically they don't know anything about the stock market. This reminds me of, like I said here, it reminds me of 2017 crypto. Now, I wasn't trading at the time, but I was very aware of the space and I was keeping track of everything during that bull run. And I remember watching a news video on a Snapchat reel where the anchor was talking about the phenomenon in Bitcoin, and he was saying that he's going to buy, he's like excited, he's going to see the top, or he's gonna hold through the top or whatever it was, and like a completely irrational statement. And he was buying in like December, so he was literally buying into the top and expecting it to go higher. And I remember at that point in time feeling, okay, this has gone crazy. When everyone is talking about it, even someone in a completely different niche is talking about how he's going to enter into Bitcoin, then we're probably close to, complete meltdown, or we're close to the top. And it was the same feeling I got when we were talking about GME in my political science class today. I was like, well, none of you people really know anything about the stock market. How are we talking about Aristotle 1 minute and GME short squeezes the next? It just feels like we're close to that euphoric high. So being cautious, this is by no means um, a video to scare anybody and say, yeah, we're at a market top. Yes, this is going to melt down. I wouldn't be surprised, since we have so much momentum behind this market. I wouldn't be surprised if we see more weeks of uptrend, to be honest with you. But the reason why I want to get flatlined is because half of my trades, like I mentioned in the tweet, were at like my profit taking levels, and the other half were right around break even. So I just entered them in the last couple of days and wasn't really sensing that market uh, euphoria yesterday, the day before, but definitely today I felt it. I'm like, okay, I'm just gonna break even on a bunch of these trades, take some very small losses, lock in my profits on the trades that were doing really well, and now I'm liquid. Now I can be flexible. I can get in, get out. I don't have to worry about my positions overnight, any news. any fundamental reason or technical reason as to why the market melts down or melts up. I don't have to worry about it. I can just get a clean slate tomorrow, which is a nice feeling. So in this video, I'm going to go over 4 reasons why I wanted to exit my position. So obviously, the one reason that I've already talked about, which I'm not going to include in the main four, is the euphoria that we're seeing in the from the average ordinary citizen who's not really trading. What we're seeing a lot of people, obviously, who seem to know everything about GME for the first time in their lives. But the 4 main reasons is SPY breaking key pivot levels, the dollar set up in a potential bull flag, three main stocks that have earnings, three that have a tremendous influence on the S&P 500, and the VIX with its greatest single day gain since June. So, with that being said, without further ado, let's get right into it. So, the pivot high that the SPY bulls need to ultimately break is 385.85. Now, we were watching this pivot low set on January 25th as a potential short-term low, and this one on January 5th of 373.70. For some reason, that's a tricky number to say. So we're watching this pivot level here on January 15th to ultimately hold, and the bulls lost that level. Now, fortunately, we closed above it today, as you can see here. Fortunately, we closed above that level, which does show that there is a bit of buying pressure here, but nonetheless, we do see that big uptick in volume, and we have lost that key pivot of support. So potential red flags for the SPY bulls. Looking in the after hours here, we do see some continuation, right? We are seeing a negative reaction to something in the market. I assume it's the earnings reports from Tesla, Apple, and Facebook. But yeah, that bearish continuation is definitely being felt after hours. So we zoom in on the hourly chart and we need to figure out a game plan. So we have this massive gap down that we saw today, huge move to the downside. So what are we looking for? Well, we need to see a bounce that's high enough to give the most likely outcome on the pullback of a higher low compared to this pivot here, and then a break of that interim pivot high to set the hourly trend change, confirm the daily bounce. So bulls have their work cut out for them tomorrow. Like I said, definitely some weakness coming in from SPY. Second reason why I wanted to exit my positions here is we see the dollar is potentially forming a bull flag. Now, it is definitely not the most pretty bull flag I've ever seen, but it has the potential to do so. So obviously, we were watching this pivot low here for the bulls to hold and the bears to break of 89.9, and the one pivot that the bulls need to break is 90.95. And we're holding, we made a higher low compared to the pivot low, and we appear to be getting very close to that pivot high. So it is arguable that the dollar is making a head and shoulders, left shoulder, head, right shoulder. But this looks too bullish for me right now to consider anything else. If the dollar does see follow through, that's going to negatively affect the asset bulls without a question. So we are going to see a negative reaction to that. That's going to bring down all the euphoria going on in GME and other companies potentially. Not calling that it will, but if we see good follow through from the dollar, we might see algos and bigger players exiting from the SPY, which will just bring down the overall market and could lead to that perpetual cycle where a bunch of retail money is in at the top and then all of a sudden they're down thousands of dollars and now they're all exiting their positions and it just kind of creates that snowball effect. But if we get a dollar break of the pivot low, that will be my cue to start re-entering into positions. We see the break higher, that's my cue to potentially celebrate. QQQ. So we're looking at the pivot high of 330.32 and the pivot low of 310.58. So right now the Q bulls have made a lot of room where the most likely outcome would be a higher low, and a daily uptrend seems to be intact. Looking in the after hours chart, that perspective changes a little bit. So we are seeing that bearish reaction to earnings. We are seeing the bulls get the bears get a lot of follow through on this. So because of the pullback, the most likely outcome is some sort of equilibrium if we are to see the bulls break out. In the hourly chart, so again, zooming in on the extended hours, we've made it basically a waterfall. The most likely outcome from here would be a lower high, and then the bulls need to defend the pivot low wherever it is set, and then break that interim pivot high to change the hourly trend and ultimately signify the daily bounce. So we will see what happens tomorrow. IWM, so the pivot high that the bulls needed to break was 217.91 and the pivot low 204.66. We are again seeing a little bit of weakness like every other sector today. We are seeing that uptick in bear volume, but as long as we can hold this pivot level, things are fine for the bulls, although it's not a great pivot level. Like looking at that right now, I do not like it one bit. I do not think it has the strength to hold. If we break that pivot level, though, we are going to most likely see a higher low compared to this pivot down here set on January 4th. So hopefully we can then enter into some sort of equilibrium and the bulls can get their bearings under them. SMH, big time weakness today, gap down open like the rest of the market, but bears really pressed the narrative all day long. We see that massive uptick in volume. Pivot high that the bulls need to break is 246.79. Pivot low that they need to hold is 211.92. I've been saying for a while that after seeing this equilibrium breakout, the most likely outcome would be, since we basically just went straight up, would be a higher low once we retest this breakout zone. So we'll see if the bears or if the bulls can come through and if the bears really have that strength this time around. But based off this pullback, the most likely outcome would be a high. Actually, we could see a move higher right from here if the bulls bought this dip right away. But if we see continuation, then we'll look for some sort of equilibrium to play out. 10 pivot high that the bulls need to break is 125.98. Pivot low is 106.88. So gap down open, not as much bear control today, but we are seeing a pretty steep retracement compared to this pivot here. Well, I was hoping that we would see kind of 30, 50% retracement and continuation higher, but we are seeing almost 100% retracement right now. So the most likely outcome would be some sort of short-term equilibrium, with a higher low compared to 125.98 if we can bounce at these levels. XLV, big time weakness today. We were watching this bull flag for the breakout. We were stalling a little bit here. I did mention in the last market sector analysis that it's okay to see a little bit of a stall after a breakout because in the right market environment, which we have been in, that is bought up from the bulls, and we see a huge increase in volume in the subsequent days to come. But we have that gap down open today, and a lot of people were caught off guard by that. That's why you can see this uptick in volume and a very bearish candle. A lot of people are still holding from that bull flag breakout. So yeah, definitely a disappointing day for the XLV bulls. But the most likely outcome is a higher low compared to 111.11, and then hopefully we can see that 118.99 break. And XLF, again, more continued weakness. We had this strong breakout. The most likely outcome from here was a higher low, but the bulls never came through. So now we have made 100% retracement right back to the breakout levels. We need to defend that 28.83 level ultimately and break that 31.62 level once the bulls can get their bearings under them. Should not say bearings. That is way too close to the word bear. Most likely outcome from here, if we bounce, is a lower high compared to 31.62, and then we will enter into an equilibrium. And XPI was definitely the strongest sector today, holding on fairly well, defending this pivot low here of 148.81 and breaking the pivot high set on yesterday's session. So new pivot high for the bulls is 159.03. Okay, so I have covered up until this point 2 reasons why I exited my positions. SPY breaking key pivot levels here with increased bear volume. The dollar setting up in a potential bull flag, defending this pivot low, and looking very close to breaking the pivot high. So now the third reason was we had 3 massive earnings reports today: Tesla, Apple, and Facebook. So Tesla's earning report has been bearish so far. We are seeing a bearish reaction to the earnings. I believe it was they missed profit. They had a lower profit than previous quarter. I should read the report a little bit more thoroughly before making these videos, but yeah, I believe they missed profit. So we have seen a bit of a waterfall here, but not a crazy bearish reaction. We have definitely lost the hourly uptrend, but if the bulls can buy this dip, defend the pivot low, and break the interim pivot high, Tesla is fine. Apple, bearish reaction, although they had better than expected earnings, and this is with the extended hours chart on, but what we see is a impulse move to the upside. All we're doing is making a higher low. So long as we can hold this pivot down here, all is good for Apple. Looking at the normal chart, yeah, so all we need to do is just defend this pivot level down here, make a higher low, all is good. Facebook, bearish reaction initially, but bulls bought that dip in a big way. You can see on the hourly chart here, big wicks. So seems that the bulls have held on relatively well. We'll see what transpires overnight. So that was reason number 3. I just didn't want a massive bearish reaction to these big earnings, which would obviously affect SPY and QQQ in a big way. My portfolio was split about 50% tech, 50% renewables. So that 50% exposure to tech would have that negative impact if we saw these tech names have a bearish reaction. So that was reason number 3. Reason number 4, I never usually cover VIX, but today I will. We have this trend line that has been acting as resistance basically since, oh, we can even count down in April if you draw it correctly. So we didn't get a close over that trend line in April. So it's been a particularly stubborn resistance for the volatility bulls. And so today we saw an increase of, I believe, about 50%. Yeah, 57%. The other area that I was looking at was over here, 25% back in June, 40%. So I mean, this has been the biggest percentage increase in volatility that we have seen since March. So again, that's another reason why, all right, maybe this is just getting a little bit too crazy. There is so much I can't control. And I'll lastly finish this video with looking at GME here. And obviously, the RSI in this type of situation means very little, but I just want to call your guys' attention to this 98.42 RSI. I mean, we're almost at 100. I don't think I've ever seen a stock hit 100 RSI before. So again, it's just, don't want to get too far ahead of myself. This market has a tremendous amount of momentum, but when you see the boat tip and all of these retail traders in stocks like GME, NOK, BB, AMC, it's just, that's when you see a complete capitulation of the stock, people FOMOing out of the position, closing their positions in fear. And I think that could potentially negatively impact the market, especially if we see that dollar continuation out of the 90.95 level and the VIX outside of this resistance trend line could definitely have that rug pull in a big way impact on the broader markets, on the individual names. So we'll have to see what transpires. But right now, I feel comfortable taking a guerrilla warfare type approach where I'm staying very fluid, very dynamic. I'm in a position, I'm out of a position very quickly. And all the positions that I exited, I had built for longer term holds. So definitely want to protect myself in that way, but I'm still ready to enter. I'll look over some of the stocks that I'm currently focused on most. So BLNK still at the breakout zone, extended hours right there, $55. I bought at $55.50 and sold right at break even. BLDR, again, similar idea. This is basically where I bought. I bought at $24.30. Laser, same idea. CSCR, huge upper wick. Look at that volume. That's incredible. So I will be looking for an entry tomorrow. And this is one of my favorite stocks because you can see it's so well defined in this daily uptrend or on this hourly uptrend. But you get the idea. I'm just trying to be as protective as I can of my positions of my money. And I want to just be a little bit more dynamic, a little bit more fluid, a little bit quicker in my entries and exits with a bit more size so I can maximize those smaller moves and take advantage of the market as best I can. So that is my breakdown of everything. I hope you guys enjoyed. Again, I do not wish to present a doom and gloom narrative, just a cautious one. Hope you all have a great night, and I'll talk to you tomorrow.